Hello and welcome. You tune in to Buy Now Sell Now with me, Ankita Saxena, and with me is Snehi Shah. And for the next half an hour now, we will get all your questions answered by our experts on your stock. But before that, let's take stock of how the market is shaping up. Snehi, we have managed to break in the 2-day losing streak that came in after that sentiment dampening that came after Kashmir. But now, buoyed by FII buying also, market is looking good. Nifty is trading with gains of 1%. Nifty Bank also following suit is trading up 1%.
Absolutely, looking good for our markets. Hi there, good morning. We're off the lowest point of the trading session by roughly 180 points, and it's almost 200 point uptick coming in on the spot basis on Nifty. Looking good. We're close to the 24,250 mark. Let's see how fast we're able to scale that. Sensex up in tandem with the Nifty, almost 1% higher. Same can be said for Nifty Bank as well. You have Reliance that is holding up the market very smartly on the back of its Q4 numbers. 4% higher is where Reliance is, followed by 3% gains on BEL, Sun Pharma, Dr. Reddy, JSW Steel, all of these are up 2%. So Nifty being held up very smartly. On the flip side, you have pressure that's been coming in on the back of Shriram Finance's Q4 numbers. That's also a Nifty company that's adding to some resistance on the Nifty. Almost a 5% cut coming over there, along with HCL and Eternal that are lower by almost 2 and 1% each, along with Bajaj Finance as well. If you take a look at sectorally what's been happening in today's trade, it's the day of the pharma stocks trade. Lots of news coming in pharma names as well. Alembic, Aurobindo, Biocon, Zydus, all of these are newsmakers today. So pharma is your biggest gainer, followed by energy, metal, PSU banks, realty, auto, media, FMCG. That's the pecking order of the gainers. On the flip side, you have IT, that's 0.5% in the red. That's what the market is shaping up to be like.
All right, so that's how the market is shaping up to be. But let's get started with the show. And before that, you can share your stock-related queries on WhatsApp. You can ping us on the number that's flashing on top of your screen, and we will get your investments analyzed by our experts. Send in your stock query with the name of the stock, the buying price, and the holding period, and we will get your questions answered by experts who are now joining us. Rajesh Gaurang Shah, I beg your pardon, Senior Vice President at Geodhi Financial Services, is joining us now, and Nilesh Jain, who's the head derivatives and technical research, Centrum Broking, joining. Good morning to both of you. Thank you so much for joining us. Let's get started with all the queries then. The first query, let's get started with all the queries. Let's take the first query then. The first query is coming in from the first query is in Reliance. The results have already come in, and it looks like a decent set of numbers, especially the growth coming in as far as the retail space is concerned and the telecom space is concerned. Good double-digit growth coming in as far as Reliance is concerned. The stock has finally moved up 4.5%. Now, Gaurang, coming to you on the fundamentals, how does Reliance look to you? Because that's one of the safe haven stocks, right?
Thank you so much for having me on the show. Good morning to all of you all and to all the viewers. Well, it was a pleasant surprise last week with the numbers that got delivered by Reliance Industries. It was much better than largely what the street had estimated. We have been positive as a disclosure, and I think prudent to give that we've been positive on Reliance for many, many years now. This is one company that has been continuously under our coverage on the buy side. Extremely pleased with the kind of numbers that are delivered, and our anticipation is that as we go into the earnings for this new financial year, I think there is going to be improvement for the better. If you bought it, hold on to it. If you not bought it, I think it's a great opportunity to possibly start nibbling into the stock. I think there is a lot of uncertainty as far as the cross-border issue is concerned between India and Pakistan. If something has to evolve on that side, then possibly the markets may react. Along with that, there is a truncated week this week. 1st May is a holiday. FNO monthly expiry will happen on Wednesday, that is 30th of April. So there could be choppiness, volatility, but at least take a step forward. Start at current levels and on dips buy.
Buy on dips is a strategy on Reliance. Gaurang as well as Nilesh, good morning and thanks so much for joining us. Nilesh, we'll come to you for the technical query now. Our viewer, Mr. Jayesh, is writing to us from Mumbai, and his stock in question is Hindustan Copper. He holds 4,000 shares of Hind Copper at 299 rupees per share. He's asking, technically, how is it placed on the charts? What are the next levels you're spotting?
Very good morning to you. Good morning, everyone. Hindustan Copper, if you look at this particular stock, it is constantly in a downtrend. It started the fall after making highs near about 410, 411 in the month of May 24. So last year we saw that high, and since then it is constantly forming a lower top and lower bottom formation. So structure wise, it looks like it is heading towards 200 to 190 on the lower side. So any pullback, if at all we see, that might get sold into till the time it doesn't take out 240 level on the upside. The structure looks weak. So better use any pullback if at all you see to exit, and unless and until if somebody has a long-term view, then probably one can stay put keeping a stop loss below 195. Otherwise, purely from trading perspective, the structure looks weak.
All right, so that's Hindustan Copper on the charts. But coming to you, Garang, this is Bharat who's writing in. He wants to know your fundamental view on investing in Cyient. Now, he's not written how much quantity does he own, or what is the buying price, but he wants to know a funda, view on Cyient, because this stock has corrected fair bit, 33 odd % correction that we have already seen on Cyient. So, would this be a good buy at this juncture?
So, unfortunately, the numbers for the fourth quarter reported by Cyient Limited. Now, Cyient Limited happens to be a small to mid-cap kind of a IT company. Before we witnessed the fourth quarter earnings, the numbers are very, very good. Unfortunately, because of certain reasons, fourth quarter was much below what the street had penciled down. But we believe it is a one-off case. We don't believe that there's going to be a prolonged underperformance on the earnings front from Cyient Limited. We have an accumulate stance on Cyient Limited. So if you have invested, stay invested. If not, you can start accumulating.
Take on Cyient. Gaurang, we'll come back to you because it's a funda query. Our viewer, Mr. Nagakumar, is writing to us from Hyderabad, holds 500 shares of Tata Steel, purchased at 125 rupees per share. His question is, can he continue to hold for a long term of 2 to 3 years, or would now be a prudent move to book profits? What's your view on Tata Steel as a company? How's it looking like fundamentally?
Well, he's got a very decent time horizon. 2 to 3 years is what he's mentioning. And I have always recommended through our channel ET Now that if you invest in metal sector, then one thing you need to bear in mind that have a 2-year plus time frame because of the geopolitical, global news flow. We've heard about tariff on certain products from US on aluminum and steel. We've heard about certain news flows from China, which always is an overhang. Dumping is a big issue that India needs to handle. The government is proactive by implementing anti-dumping duty or increasing the minimum import price or a countervailing duty, whatever be it. Tata Steel happens to be in our coverage. We have a whole recommendation from a long-term point of view. And the good thing is that the domestic consumption of ferrous and non-ferrous is likely to go up at a steady rate. And along with that, the concerns as far as the input cost was concerned till about a year back or 1.5 years back is now very, very, comfortable in terms of lower input cost and margin improvement. So hold on to it.
All right, so that's the view coming in on Tata Steel. Hold on to it is the view. But coming to you now, this is for a technical view. This person has not written their name, but they want their view on Mphasis, VATech, Vabag, and DLF, if these can be bought as of today.
Right. First of all, Mphasis, this particular stock, in fact, today, if you see Nifty IT pack is witnessing some bit of pressure at the highs. So looking at the overall structure of the Nifty IT, which is indicating more sort of a consolidation that is likely to continue. So Mphasis, purely from a trading perspective, looks like it is stuck in the range of 2400 to 2600. Whichever side it will break, we can expect a follow-up move of 200 to 300 points. But as of now, if somebody is already holding the long position, can keep a stick stop loss below 2400. Now, second stock is VATech Vabag. So Vabag, this particular stock is also witnessing a bit of selling pressure at the highs. 1500 is an important resistance zone. Cluster of resistance, I would say 200 DMA, 100 DMA, and also a couple of short-term moving averages are also placed in the range of 1400 to 1500. So as of now, looks like a bit of a sideways. And if somebody is already holding, then should keep a stop loss below 1300. If it breaks below 1300, it will be considered as a structure breakdown. Then probably one should exit and shift to another stock. As of now, looks more sort of a sideways. Now coming to DLF, see, it's a positional buy. It is trading in slightly oversold territory. We have seen a lot of consolidation with a downtrend in this particular stock. But as of now, it has a very strong support in the zone of 580 to 625. So that should be the stop loss for the long position. One should have a positional view in this particular counter, and it has a potential to test 700 to 725. But for that, one needs to wait and give some more time. Purely from a trading perspective, this counter is also witnessing a bit of selling pressure at the high levels.
Okay, Nilesh, just hold that thought. We are being joined by Mr. Manoj Bhatt, the MD and CEO at Mahindra Holidays and Resorts. He's joining us on the show right now. Sir, thanks so much for joining us. It's been a good quarter overall for you. Help us understand a little bit more about how quarter 4 has been for you. What's the outlook going ahead? And let's start by talking about member addition. Because while all looks good prima facie, your member addition was down 63% on a year-on-year basis. What has caused this drop? Because we were expecting the Kumbh Mela to act as some sort of a tailwind for the business. Has that happened? Have you seen any impact from the Kumbh Mela? And if you could help us understand this drop that we've seen in member addition in quarter 4.
So first of all, thank you for having me on the show. So if you look at quarter 4, actually it's been a very good quarter. If I look at various metrics around revenue, in terms of resort revenue growth, for example, our resorts showed a growth of 14%. If I look at profit growth, I think it was about 61%, excluding some one-offs. This is the standalone numbers which I'm talking about. I think you're right. I think member addition was down, but I think that's part of our strategy which we have been articulating about trying to make sure that we actually focus on members and focus on the members who we can serve with our current model of resorts. And that's something which I think meant that we have looked at where are the members coming from, which are the areas we are actually going into. So we have eliminated some channels. So that's had an impact. The second theme is obviously premiumization. I think our average AUR is up 39% roughly if I take a full year basis, which is the average sales value. And if I take just quarter 4, it's up 82% on a per member basis. So I think we are really seeing an uptick in terms of more premiumization and led by product mix as well as geography mix. So I think those are some of the initiatives which have really brought some of the numbers down in members. And from our perspective, we are focused on making sure that member to room ratio, which is a factor of availability, I think we really look to add a lot of rooms. So I think overall full year we added 520 rooms, which is the highest ever room count addition. We added about 7 new resorts during the course of the year. And what that does is actually it provides members a lot of options and improves availability for them. I think your last question was about the Kumbh Mela. So our model is not based on short-term swings because our model is more member-based. So really, I think while these help from creating destinations and making them popular, but I don't think it has an immediate impact on our business per se. Because we are not the conventional hospitality business. I think our business model is based on members, and then how do we make sure that we provide members the best of experience.
Right, Mr. Bhatt, hi, good morning. This is Ankita also joining in. So, Mr. Bhatt, resort occupancy has taken a slight hit as far on a year-on-year basis. How does the demand trend look like for quarter 1 and quarter 2, given that we have the summer holidays going on and we also have the upcoming monsoon season?
Yeah, so I think that's a great question. So if you look at occupancy, the way to look at it is that whenever we open a new resort, I think that resort takes some time to hit our normal occupancy levels of 84%. So if I look at the numbers, I think you should look at it from that perspective, that our existing resorts have done equal or better, and the newer resorts are slightly lower. But that's something which is a temporary phenomena. We don't see any dip in enthusiasm and any dip in trends in terms of people actually holidaying, our members holidaying and actually taking vacations. So I think as I look into Q1 also, we do believe that it's going to be a strong quarter like always, and then that those patterns have not changed because they are fundamentally driven by 2 or 3 things in my belief. One is, of course, we are seeing more and more people doing shorter holidays. They are doing driving holidays, which are helped by better roads. I think the flight connectivity has helped. So I think all of those trends remain intact. So from our perspective, I think we are not seeing any trend of any demand weakening, and that's probably more in line with the industry also. But specifically for us, I think we go into Q1 with no change in trend in a continuation of the strong demand.
Mr. Bhatt, sounding good. Let's talk about the guidance that you've shared to double your inventory base from roughly 5,000 to roughly 10,000 keys by FY30. You're already north of 5,000, 850, 870 plus. What are the key growth pillars for this? Will the focus be on greenfield or brownfield projects? Would it be a mix of both?
I think so we have three models. So one is clearly about building our own resorts, which is the greenfield. And currently, we hope to complete two more this year and go live. And another two we will expand during the course of this year. We are also hoping to open up new greenfield, which will take some time to construct, maybe anywhere between 2 to 4 in the course of this year. So greenfield is an important component of the strategy. But today, as I see it, I think our swing has been towards a more capital light model. So we have a lot of partners whom we enter into long-term agreements from a lease perspective. So my sense is today's mix is about 50-50 lease versus owned. I think that ratio as we grow, I think will swing to the incrementally maybe 30 to 35% could be owned, and the balance 65 to 70% could be in partnership with people who are putting in the capital, and that really makes for a strong, robust capital light model as we grow in. And from my own perspective, I think we are well on track for that goal of 10,000 keys by F30.
Okay. Also, Mr. Bhatt, what's going to be your expansion strategy going ahead? And are you targeting the new geographies or focusing on strengthening the existing destinations?
So from our perspective, I think both is what I would say, because there are some popular destinations which are take places like Goa, for example, as an example. That's something we are looking to expand in. But recently, I think we just opened our first resort in Andhra Pradesh, in Dindi, which is on the banks of the Godavari. It's a very beautiful location. Similarly, we are looking to add more in states we are not present. So you should see some of that roll out, especially on the eastern side of India, and which starts all the way from Andhra upwards. So that's one area, is expanding geographical focus. And then, of course, there are certain destinations which we'll keep adding to. And I think it's a combination strategy. And that's something which we have seen works the best, because I think most of our members would like newer destinations to explore, but there are always going to be all-time favorites where we would like to add more capacity.
Okay, and while we are talking about capacity addition, sir, help us with your capex outlook for FY27 and FY26 and FY27 to meet your expansion targets going ahead.
So from our perspective, so two things are happening next year. As I said, we are going to start some greenfield projects and complete some during the course of this year, as well as take up renovation on some of our existing resorts. And both of them would mean an increased capital outlay. Now, of course, I don't have a number for you, because a lot of these depends on approvals and so on and so forth coming in place. But the way I look at it is, we have about 1,550 cash, which would mean that from our own perspective, if I look at it, I think we have plenty of capital to invest, and that's something we will fund through internal accruals, and we will not be taking any debt for this capex.
Right. Also, Mr. Bhatt, how are you addressing the completion of new age players like Airbnb or the boutique hotels like a Saffron Stays? How are you competing with these?
I think that that's a different segment. Obviously, there are two models here, and I do believe that as the industry grows, you will see more of this. One is there will be people who will be offering something different, and I think we do think of partnerships as part of the offering to our members. So maybe some of these options could be as partnerships, and then wherever we do see a trend which is more permanent, I think we might take some kind of shift into that position. But currently, I think the focus is in terms of tying up. So, for example, recently we did tie up with certain alternate accommodation players in many locations to try and give our members a sense of something different. And that's something we'll observe and see. But at this point, I do see partnerships as a way to offer our members more.
Mr. Bhatt, thanks so much for shedding some light on what the strategy going ahead is and also helping us understand your quarter four a little better. On that note, we'll let you go. Once again, thanks so much for joining us. But with that, viewers, time to slip into a very short break. When we return, we'll start addressing all your stock queries once again. So keep writing to us. We'll be right back.
Welcome back. You're tuned in to Buy Now, Sell Now. Let's take stock of how the market is shaping up right now. Well, Nifty sitting pretty above the 24,270 levels for now. We're trading with gains of almost 1% on the Nifty. Nifty Bank also is trading with since we managed to tick up from the day's low, 627 odd points from the day's low on Nifty Bank as well. Broader markets also following suit, looking good. The Nifty mid cap is trading with gains of 1.2%. That's outperforming the benchmark indices as well. Nifty small cap is trading with gains of 0.7%. So a bit of a lag coming in on Nifty small caps, but nonetheless, they both are managing to trade up right now. In fact, they have recovered from the day's lowest point. And if you look at the sectors, also Nifty Pharma is buzzing. Right now it's trading with gains of 2%. Lupin is up 4.3%. There is Ajanta Pharma, Glenmark, they're all trading with gains of 3% odd. Now let's pull up the chart for M&M also. Now big news on M&M that has come out M&M that has come out that they have acquired 59% stake in SML Isuzu for 555 crores. So that stock is up in a way 1.5% in trade today. That's going to be in focus. Reliance is another stock that is really pulling up the Nifty right now because that's a heavy weight that's reported its quarter four numbers, a good set of numbers, a positive brokerage notes coming in there. Reliance is up in a way 4.4% in trade. Couple of other names like RBL Bank, we have DCB Bank, IDFC. These all are earnings candidates that have posted the good to decent set of numbers. And on the back of that, look at RBL Bank. That's up almost 10% in trade today. On the losing side, we have Shriram Finance from the financials that is trading with cuts of 4.2%. That's also the top Nifty loser for now. So largely, we do see the advance decline ratio is in the favor of the advances. So largely a positive day for the market coming in. But let's resume with all the stock queries that we were taking in, and Gaurang is here with us. Gaurang, coming to you. This is Shankar who's writing from Tuticorin. He wants to know, how does the defense space look like for the next 6 to 8 months? He's holding HAL. He bought it at a price of 4,220. He has Cochin Shipyard as well that he bought at a buying price of 1,500, and GRSE as well that he bought at 1,600. So how does this defense pack look like to you?
Well, first of all, we have been extremely positive on the defense sector right from the time the government opened up defense FDI. And then we saw a whole host of government-owned companies come and hit the street with their IPOs, and the rest is history with the kind of performance that we've seen. And of course, post the dream run-up, a little bit of profit booking correction, consolidation. So as a theme, as a sector, we remain positive. Some of the companies that we have under coverage is Cochin Shipyard, BEL, BHEL, to name a few. And I would like to add one more thing over here on the fundamental side. Look, if you're investing in defense, please do not have just 1 year, 1.5 year kind of time horizon, because defense is a theme which plays over a longish period. It takes much effort, more technology, precision, and of course experience to make defense equipments. It's not like a company's got an order this morning and tomorrow they starts manufacturing. No, it doesn't work like that. There's a detailed hard work that is put into place, a prototype is developed, and then mass scale production starts once that prototype gets the approval from the respective authority and defense ministry. Having said all that, I think these are the companies that we have coverage. The companies which are also, very good, very sound, but it is not a recommendation in terms of buy and sell, but a play, a theme that you want to, look at defense. Then the companies are like, Hindustan Aeronautics, Mazgaon Docks, Garden Reach Shipbuilders, you have Bharat Dynamics, you have BML. Again, I will repeat, these are not recommendation, but just a reference to the strong defense companies that are worth in terms of order book execution and the kind of earnings turnaround that these companies will do.
Appreciate that view. Next stock query coming in from our viewer Mohit, who's writing to us from Ludhiana, and he holds 500 shares of Coal India at 152 rupees per share. He's saying his time horizon is 2 years. What should he do? Should he continue to hold going ahead?
I mean, again, a company which is owned by Government of India, Coal India, has one of the largest natural reserves of coal under its belt. We've been positive on Coal India. We have a hold recommendation from a long-term point of view. And it's glad that when you look at mining or capital goods or defense or even as a matter of fact, railways or power, you need to have longish time horizon to have meaningful profit from your investments.
All right, moving on to the next question. This is Vijayan, who's writing from Tamil Nadu. He wants to know your view on Blue Star. For a holding period of the next 3 years, what would be your view on Blue Star then, Gaurang?
This is a discretionary play. Discretionary means individuals like you and me can postpone the buying of ACs, microwaves, coolers, refrigerators, high definition television, microwaves, etc., etc. But it is a necessary now with the kind of summer that we are witnessing, almost 40 degrees plus here in Mumbai some time back, and it is likely to hit beyond that in the coming days. Month of May is going to be very, very painful with respect to the kind of summer that entire subcontinent is going to witness. We have been positive on Blue Star, we've been positive on Voltas, we've been positive on Symphony. These are the names for the discretionary stroke consumer durable play, if you will.
Okay, let's move on then. And our next query is coming in from our viewer, Miss Seshama, who's writing to us from Chengalpattu. She holds NMDC Steel shares from June, and she holds 1,000 shares at a price of 60 rupees per share. She's saying, should she continue holding this or book her loss and shift to Tata Steel? What's your view? Would you pick Tata Steel over NMDC Steel?
Well, it definitely is a better company. I don't recollect whether we have a coverage on NMDC Steel, so I won't give a specific over here. But Tata Steel, and we discussed this talk in the, earlier in the show when one of the viewers stroke investor had invested in Tata Steel. Then I mentioned we do have a positive coverage of Tata Steel. And in terms of comparison, earnings as well as numbers, Tata Steel is a much better company.
All right, Tata Steel is a better call than NMDC Steel. Coming to the next question, this is Gaurav writing from Bangalore. He wants to know if he can enter CDSL and Indigo at this price. Now, both stocks have done better as compared to the market. In fact, especially Indigo has moved up almost 33% in even, in the market drawdown. Is it a good time to enter these counters?
Indigo is, I think, one of the best performers, if you will. Even when the market was down and out, this did not go down as much. And in terms of performance with the recovery, it has been one of the outperformers. Connectivity in terms of new airports, regional connectivity in terms of Udan 1, Udan 2. Very soon we are going to see commercial operations start at Navi Mumbai Airport. Next year we are going to see a new airport up north in Jewar. Within the next couple of years, we'll have better connectivity, air connectivity via, as I mentioned, Udan 1, Udan 2. Has been consistently, increasing its aircraft fleet via outright purchase or wet lease or dry lease. Occupancy is very, very good. Run rate in terms of market share is also extremely well. We've been positive. CDSL, the next one, well, I'll just give you a broad outlook in terms of stocks associated with the Indian capital market, stock market. Now, if one has a belief and one has aspirations and one has understanding that the Indian markets are going to do well over the next 3 years, 5 years, then it's a very simple logic in terms of companies which work in tandem with what the Indian stock market is doing will also do well. So, for example, this is not a recommendation. Say a platform provider like BSE, of course, we are being positive. There is a lot of news flow about NSE IPO. We'll have much more clarity as we go into the future. Then you have services provider like CDSL or CAMS. Now, as a disclosure, we have a positive coverage on CAMS. Then you have intermediaries which provide much more, high-tech platforms for retail investors to start their investing philosophy. So if Indian stock market, capital market is going to do well, all these companies also want to do well.
Okay, Gaurang, appreciate your view and appreciate you standing by as well, since we had a lot of management interactions on the show. Appreciate you staying back. Thanks so much. But on that note, we'll wrap it up on this edition of Buy Now, Sell Now. Viewers, apologies. That's all we could manage to squeeze into the show today. But we'll once again meet you tomorrow at 11 a.m. and start addressing all your queries with our experts once again. So keep writing to us. But till then, it's a goodbye from Ankita, me and the team that put the show together. Markets at Noon is up next.